Hello, I'm Alan Kohler, Editor-at-Large of Intelligent Investor and finance presenter, columnist and podcaster for the ABC.
And I'm Stephen Mayne, contributor at Intelligent Investor, founder of Crikey and shareholder activist.
And what are we, Stephen?
We are, if you ask me, Alan, we are the Money Café, taking a brief break from the World Cup to record a cafe. So
you're watching the World Cup?
You're watching the World Cup? I'm loving it. I'm absolutely loving it. So the French just had a good 3-1 win over Senegal. So they'll be now the warm favourites after the Spanish couldn't even get over Cape Verde yesterday.
Right.
And what about those Australians? I missed the 5 a.m. block square AGM in the US this morning. I'd set the alarm. I was all set to go to it and slept in. I just missed it. So I'm not going to sleep in and miss the 5 o'clock start for the Australia-US game in Seattle on Saturday.
So it's 5 o'clock,
Are you watching it? Are you excited?
No, I'm afraid not enough happens at soccer for me. I mean, it's look, I did watch the Australia game the other day. Who was it against?
Turkey.
Yes,
Come on, Gallipoli revenge. Gallipoli revenge, Alan. It was huge. The mighty Turks. We took them out.
We did, that's right. 2-0.
Yes. I think that was our greatest World Cup win, looking back. I mean, there's been some rippers, but just the way that's captivated the nation, it was just absolutely magnificent. Patrick Beach, incredible goalkeeping. So, it was just fantastic. So, going to be a massive productivity drain on the world economy for the next six weeks. It goes on forever.
Yeah. Oh well. Anyway. So, what do you make of the SpaceX?
You can go back to watching. You can go back watching the bombers, mate. They're doing no good. SpaceX. Look, my one share, I've got one left. I bought 4. I applied for 10, got 4, sold 3 on the first day, and I'm left with 1. It's closed at 206 this morning. So it's now popped 52% from the $135 float price. It went past Amazon today and briefly in intraday trading went past Microsoft to be
did it? I didn't realise that.
The 4th biggest. So it's now capped at $2.66 trillion. It's just done a $60 billion acquisition, paying in stock. They've bought a business called Cursor. And when you're paying in inflated stock, you can buy anything, Alan.
That's right.
So, I read your column on the ABC. It's just, you and I are on a Unity ticket. The whole thing is just a hype, meme stock, ridiculous. But every day it goes up and every day we look more silly, don't we?
I guess eventually we'll look not silly, but look, it's as I think our mate James Thompson said, it's not really a company; it's an idea. It doesn't, the sort of normal valuation methods don't apply here. It's just completely got nothing to do with it. Multiples of either revenue or profit. It's completely all irrelevant, really. The valuation of $2.66 trillion, could be anything. So I don't know.
The 505-page prospectus talked about current revenues of $18 billion. And then we get a tweet over the weekend from Elon saying that he's going to do $1 trillion in revenue by 2030. He should be getting arrested for that. He's put out a prospectus and then he just does a tweet saying, I reckon we're going to get $1 trillion in revenue. So it's a strange old world, Alan. I reckon in 2030 we'll be getting Prime Minister Pauline Hanson, having just appointed Gina Rinehart to run the Australian Doge department, doing a text congratulations of her mate Elon saying, well done for getting $1 trillion in revenue, Elon, in 2030. They said you'd never make it. How can you just make a forecast like that?
I don't think he's going to make $1 trillion of revenue in 2030. I just don't really see that happening somehow. So, look,
Gina's
you're right.
Well. Gina's put $1 billion in and she's already $500 million in front, US, on paper.
That's right.
She jumped to the front of the queue. I thought all us ComSec people getting scaled back, 10 down to 4, and there's Gina leaping to the front of the queue with $1 billion US. Thanks for coming.
You got scaled back from 10 to 4. That's it.
Yeah. But Elon was running a chairman's list. Have you heard of the concept of a chairman's list, where when you have a capital raising, the chair gets to decide who gets the stock? So getting on the chairman's list is always a way to queue jump. And Gina was obviously near the top of the chairman's list. And you see they've taken the extra $10 billion. So it's now not a $75 billion US raise. It's an $85.7 billion US raise.
Well, of course, they were always going to do that. That's called the green shoe option, where investment banks get to sell another 10% of the stock on top of the original IPO if they want to. And, of course, they wanted to this time, that's for sure.
They don't get commission on the extra 10%, extra 15% actually. So it's $10 billion at 15%. Yeah, they don't get commission. So the fees are about $500 million US across the lot. Only about 0.7%, which is quite low, I thought. But they don't get a fee.
Yeah, but it's 0.7%. It's 0.7% of a big number. The fees total $500 billion US dollars.
Yes.
I mean, 500 million. Still,
CommSec was only taking 0.2 on us because it's a fee on a fee. So Macquarie was running Australia, so Macquarie gets their cut, then they manage CommSec, they get their cut, but the overall fees were 0.7.
Yeah, but they're all making tons of money on brokerage because there's so much trading going on. Yeah. Wall Street, and the Australian brokers they're all having a lovely time.
Yes, but everything else is getting crowded out. Palantir stocks down 20% in June. Crypto so there is a crowding out factor, I reckon.
Yeah, no, you're right. And then we've got two more big IPOs coming, OpenAI and Anthropic. So they'll do some more crowding out.
They will, and they'll certainly get those away, won't they? I mean, if Google can raise $85 billion in a secondary raise, and then Elon can raise 85, then the previous 3 years they barely did $80 billion over 3 years in IPOs in the US. So they'll end up probably doing $300 billion this year. I mean, this is actual cash. It's not just paper. People have written $85 billion checks to Google and SpaceX in the last 2 weeks. That's never happened before in public market land. So you'd be mad if you were NVIDIA and OpenAI not to tap this. If the public markets are so leaning in, then put your hand out. Take what you can get.
Yeah.
Anyway, we've got a few questions on SpaceX later, but what do you think of the Iran peace deal, or 1.5 secret pages of it?
Yeah, well, so the the Saudi Arabia official news agency, the state-owned news agency Al Arabia, has published what it says is a leaked copy of the agreement, which is 14 points. So if you Google that, you can find it. It's interesting. I mean, look, it's not confirmed. Neither the US or Iran has confirmed that is the agreement, but it looks like it, I must say. And the key points are that Iran gets $300 billion of reconstruction money. And it doesn't entirely come from the US, I think, but the US undertakes, together with its regional partners, to create a comprehensive plan to pay $300 billion. Iran agrees never to have nuclear weapon, and there's no mention that they've agreed to reopen the Strait of Hormuz immediately, and the United States agrees to withdraw its forces and to end the blockade. But there's no mention of Iran not tolling the strait. So they haven't agreed to not control it. They haven't agreed to that, or they haven't agreed not to toll it, according to this 14-point memorandum. So, yeah, I mean, everyone's saying that it's a comprehensive loss for America and a victory for Iran, and that looks true to me, I must say. That's what it looks like has happened. I mean, Trump has been saying that there needs to be an unconditional surrender by Iran. Well, that has not happened. There hasn't been a regime change. And I think they were never going to insist on having nuclear weapons to begin with. They could have got that agreement without bombing them. So all that's really happened is that they've assassinated an old man. The Supreme Leader Ali Khamenei. That's what's happened. They've killed him, and they've done some more bombing and disrupted the global oil market, and that'll be disrupted for a while and cost everyone lots of money, and it was completely pointless. And
it's interesting, there's so there's 100 tankers stuck in there at the moment. So they'll all get out because you've got this 60-day negotiating period. So the oil price is coming off quite a lot. And those 100 tankers will get out. There's already a few of them passing, the very large gas carriers. But the real test will be if any empty tankers are prepared to go in. So that's the real test. And that's where the 60 days, so at least the strait will be unlocked. Everyone that's blockaded in there gets out. Oil will flow. And the Qataris are saying they reckon they can get 50% of their lost gas production back within 4 weeks. So you will get a bit of, but is the strait going to stay open? Will it be toll-free? Could this blow up again? And then you've got, of course, Israel and Hezbollah. The 300 billion is an element of good behaviour bond with the 300 billion. But last time the Iranians got a pile of cash, for good behaviour, they kept on supporting their proxies like Hamas and Hezbollah. And so their ability to walk away from their sort of state-sponsored terrorism piece, with the cash that's coming for reconstruction, I think that'll be the test, because they can still cause an awful lot of trouble whilst not building a nuke. So,
yeah, of course.
Can the regime be trusted to, behave itself?
Well, the obviously a nuclear weapon would be designed to gain leverage, and now that they've got control of the Strait of Hormuz, they've got leverage. So they don't need a nuclear weapon for leverage. I mean, Trump and Netanyahu claim that Iran would actually try to obliterate Iran if they had a nuclear weapon. I don't think that's true. I think that would be ridiculous. So it was all about just getting some leverage, and now they've got it. So I don't think that's. It's interesting. The other point in the agreement that's been published by the Saudi Arabian news agency is that all of Iran's frozen funds that have been sanctioned will be released and made fully available. So they've just completely won. It's amazing.
And what will they do with all those funds? I think that's the interesting question. So,
well, they've got a bit of rebuilding to do, and they'll obviously
do.
They'll rebuild and they'll maintain and grow their drone capabilities.
Yeah, but how big will the defence budget be? How much of the 300 billion goes into missiles and drones versus actually just back to the people sort of stuff. So. I was amazed, actually. The Iranians, the 70,000 in the stadium in Los Angeles playing the Kiwis, and the majority of them were barracking for the Iranians. I mean, if you're at war with a country, you wouldn't think you'd go into that country and then have the majority of 70,000 people backing you. Just goes to show how unpopular the war is, And then, of course, they got shipped straight back to Tijuana straight after the game. They weren't allowed to stay in And locally, there's so many implications of all this. Does the Labor government here put the 32 cents a litre excise back on July the 1st? So when we next chat, Alan, in a fortnight on July the 1st, oil should have gone up 32 cents that day. Do you reckon they're going to do it, or are they going to blink? Because once you give something, it's so hard to take it away.
I'd say they will, for sure. I mean, it's in the budget. They absolutely need the money. Of course they will, for sure. Particularly
you won't think they'll do any smoothing or graduated approach, you reckon this is going to go bang, up they go 32 cents on July the 1st? Well,
yeah, but I mean the 60 days will still be in place. The petrol price will have come down a fair bit, so I think they'll be able to do it for sure. It's not possible that all the fact that they were cheering for Iran shows the unpopularity of New Zealand over there, does it?
It'll be interesting to see where the noise sits with Australia and Seattle. Whether enough Australians can get in there to blanket the place in yellow and drown out the Yanks. So
I doubt it.
Yeah, I wonder if the World Cup can we say remember how the boss of FIFA gave Trump the FIFA Peace Prize. Did the World Cup help get the deal done? You don't want to be at war while you're hosting the World Cup, I mean, the World Cup was set up in the 1930s initially to stop countries from fighting. Save your fighting for the soccer pitch and stop going to war. I reckon there's a bit in that. The world's loving it, and we're all enjoying, national competition on the field, not at war.
No, good point. I think there's something in that. You're right.
And the Russians will be sitting there going, we're not even allowed to play because we're warmongers. We're missing out. So peace in the Ukraine and come back to the next World Cup, Vlad. Anyway, now we should do interest rates before we do questions, Alan. It's nothing's moving, but it's all still quite interesting. Australia and America.
Yeah, that's right. So we've got the American Fed having the first meeting under the new chairman, Kevin Warsh, who I wrote in my weekend briefing on Saturday will have to betray Trump because he's got to establish credibility. So therefore, he'll have to put up interest rates at some point, and then there'll be a big falling out, I guess. Even if he doesn't, maybe they won't put up interest rates because they don't have to for the moment because petrol prices are coming down and so on. But he's going to have a sort of a hawkish posture about him, I think, to sort of distance himself from Trump's statements about how he's going to he expects him to cut interest rates, and that, he needs to show that he's not politically politically controlled. As for Australian interest rates, well, I think that's it now. 4.35% is where they'll be this time next year. But I've said that before and been wrong. But that's what I think is going to happen now. I can't see. And look, there's a few kind of economists who are in that camp as well now. Sally Auld at NAB is saying that's it, and the next move's down. And so a few other major economists are saying the same thing. Lucy Ellis is the remaining economist who's still calling, the big bank economist still calling a rate hike, probably in August, she thinks. So I don't think that's right. I can't see that happening.
They both feel about right, if you think about it. Like inflation, it's still a few worries, but it's not out of control. The interest rates are not ridiculously low, zero, overstimulating. We're not looking like recession, but it's not looking like, stock market's strong, economy's good, but it's not crazy. And we've had our 75 basis points increases, and they say the rates take a year to fully course through the economy. So the Reserve still is contracting monetary policy with the 3 hits at 75 basis points so far this year. They've taken a breather this month. Also with the interest rates, I loved your graph on the news the other night, Alan, showing how the US stock market always falls when a new governor comes in. And the data didn't lie. Why is that? What is the explanation? Is it the fact that the new guy is a bit gung-ho, or girl is a bit gung-ho on inflation, or it just takes the markets a while to trust the new person and capture them to take a markets-based perspective? Why does that happen every time?
Well, I think to the extent that it's not a coincidence, which you'd have to say since the stock market has fallen every time the new chairman has come in.
Every single time, yep.
You'd have to say it's not necessarily a coincidence, although Greenspan and Eugene Mayer 30% down is due to a coincidence of the 87 crash and the Great Depression in 1930. But on the whole, I think it's because the new chairman has to establish their credibility, and that means they have to act tough. Even they have to talk tough, even if they don't act tough. So I think they're more inclined to, as a new chairman, they are more inclined to increase interest rates to establish credibility with the markets. And if they can't justify increasing interest rates, they talk as if they're going to. So I think, therefore, the whole stance of a new Fed chairman is going to be depressing to share markets. That's pretty clear. And that's what really needs. That's what should happen this time with Kevin Warsh. I mean, we'll see what happens, but
and he will betray Trump. He has to, and he hasn't got the numbers not to, because Jay Powell's still there. You've still got to get the whole board to agree. So
yeah, he's only one vote. That's right.
He's only one vote. But I'm interested to see where the Fed really embraced radical transparency after the GFC with the dot plot and he has said there's too much commentary. And he wants to wind back the radical transparency. The Fed should talk less speeches, less releases, less dot plots. And we only finally caught the radical transparency bug in the last year, when we've had minutes where you get unnamed vote numbers.
Yeah, and we get a press
finally
conference.
Caught up a little bit.
And we get a press conference by Michelle Bullock, which we never used to have.
Yeah, which I think is a good thing, but we still haven't gone as far as them, and I do think they will wind it back, and we'll never do a dot plot. The dot plot is a bit silly, I mean, you can got to give the markets some guidance, but really a dot plot on how people think rates are going to go over the next few years. I mean, that's that. So I wouldn't be surprised if that goes, and no one will particularly miss the dot plot being punted. But maybe saying less. I mean, you shouldn't cut it back too much because, you do need transparency when pricing money. I mean, they're the world's central bank, effectively. So be as transparent as possible on what your thinking is, I would have thought.
I'm not sure there's much point to the press conference, to be honest. She never says anything at all that's different to what's in the statement.
I noticed your son flew up for it this time. I was up in Sydney.
He always does.
Yeah. Oh, it's a good get a trip to Sydney. It's a good chance to chat to the gov who says nothing.
I know. Well, but also he has to stand in the street. What he did this time anyway, stand in the street outside the RBA at 2:30. And so they all kind of, drum roll, what happened? It's 2:30. There he is in the street standing outside. Oh, it's a hold. It's very good. I mean, Channel 9, they take it seriously, I've got to say.
Well, we've got the most leveraged households in the world, and we don't have fixed mortgages. Most people are floating. So it's an electric fence. We're all very, very cued in on where interest rates are going. And great, after 3 in a row, great relief that they've stopped turning the screws, I would say.
Yeah.
Just for a month or two maybe, but we'll see.
All right, before we get to questions, here's a quick word from our sponsor.
Tax, housing and investing could be about to change in a big way. Following the proposed changes to capital gains tax and negative gearing in the federal budget, Alan Kohler and Intelligent Investor founder John Addis are hosting a live webinar to unpack what it could mean for investors. They'll cover housing affordability, property investing, shares, ETFs, retirement planning, and the risks and opportunities for younger Australians. Join The Rules Are Changing, Tax, Housing and Your Wealth live on Thursday the 18th of June at 1 p.m. Register now at intelligentinvestor.com.au. Places are limited.
And as always, just the general advice warning. This is general advice only, not personal. And do you want to start off?
Yeah, so we had 33 questions this week. A lot of them generated from your discussion last week, including we had 3 questions on childcare from Julian, Jason and Ben. A combination of it. Julian saying, look, it gets better once your kids go to school. Look, yes, childcare is ridiculously expensive because we had the correspondent from Eastern Sydney saying she and her husband were spending $100,000 a year in after-tax dollars on childcare for their 2 kids. And everyone agreed that was absolutely ridiculous. And then Jason's ripping into you saying, don't nationalise childcare. We should do other policies like family income splitting and scaled tax cuts, where you get more and more tax cuts for every child you have under 18, which is something that happens in places like France. Anyway, look, you've seen the questions, Alan. What's you're sticking with your nationalised policy? I noticed that Albo today is going to be announcing that he's further subsidising childcare workers, and the subsidy is going to hit $7.2 billion over 4 years. So typical Labor, mainly focused on the workers. As for the consumers and the private operators like G8 Education, their share price is in the toilet. Shareholders are $500 million underwater. So you can't argue that the private operators are making a fortune. The occupancy is only about 55% nationally in childcare centres because they've been overbuilt to buggery, I'd argue, and there's been a bit of a birth drought since COVID. So a lot of moving parts, but what's your take?
Oh, look, I'm doubling down on the call for nationalisation. I think that the whole thing is ridiculous, that, we've got this private industry that, as you point out, is not making any money. They're completely up against it. There are some that are making tons of money, but not that many. And the government has to subsidise this private industry. So therefore, they're kind of, in a sense, subsidising the profits of the shareholders of these things, not just through the absolute subsidy, but also this wages subsidy today that's going to be announced. As Julian points out, it's all about when the kid's under 5. So as soon as the kid turns 5, they go to school to free education. So I just think the whole thing is a terrible mess. The education and childcare up to 5 should be free. in the same way as it is after 5. And the only way to achieve that is through nationalisation, because you can't have these private companies earning profits and shareholder returns as well. So of course that should happen. But look, I accept that it's never going to happen. Nationalisation is finished. We don't do that anymore. So the next best option would be to make childcare costs tax deductible as an expense of earning money.
I agree with that. Absolutely right.
Just make it tax deductible.
It's quite a contrast with the aged care sector. Like the shareholders of Regis more than doubled last couple of years, and Bain, US private equity firm, bought Estia, one of our 10 biggest aged care operators, and they've had a 5-bagger in 3 years. So the government has done a bipartisan agreement. They've absolutely cranked up the funding. The industry got most of what they wanted, and the private operators, and it is a hybrid model still. You've got private, you've got some publics, a lot of not-for-profit, making an absolute fortune. So that if you're a shareholder in childcare, you're absolutely in the toilet. If you're a shareholder in aged care, you're making an absolute fortune under the same government's policies. So they've been far too generous with aged care, and they need to be a lot more generous with childcare. I agree. I saw that figure of $100,000 a year. I mean, we had a full-time nanny for 8 years when we were running Crikey. And if it's $100,000 for 2 kids, hire a full-time nanny, full-time person. That's not going to cost you $100,000 a year.
That's right.
That's going to be $60,000 a year. So I think that there should be movement on the nannies policy as well. But there's so much buildings going on. The capacity in the private childcare centre, every second corner now, it's almost like more childcare centres than poker machine venues in Australia now. There have been so many new ones built because the barriers to entry to find people to sign the leases are so low. It's just very easy to be a couple, run a business, sign a lease to run a childcare centre. From Peter Dutton down, everyone's done it. So you can't unscramble that. But the government should look after the consumers more and make the cost of it more attractive in after-tax dollars particularly. And I agree with you that allowing a big tax deduction on your childcare fees or your live-in nanny, actually would be a very sensible way to go, given that our tax earners are paying such a huge amount of money to Canberra relative to other tax options the government's got.
Well, and obviously it is clearly the cost of earning income. It qualifies as a tax deduction, I would have thought.
Yep.
More so than negative gearing, a tax deduction on your investment property. Clearly.
How does that make it? I mean, the world's gone crazy when you put it in those terms, isn't it? Tax deduct your investment property, but don't tax deduct the cost of looking after your kids so you can go to work.
That's right.
Fair income. Wake up, Australia.
Katie says, I live in a regional Australian town of 3,000 people and 900 households. If every household eventually electrified, switching from gas appliances to electric, adding batteries and replacing petrol cars with EVs, it seems reasonable that each household would conservatively save around $3,000 per year on energy costs. That equates to around $2.7 million for the town that stays in families' pockets, rather than, in the case of fuel, disappears offshore. What do you think will be the long-term household and regional economic impacts of electrification, and what might it mean for family budgets, local spending and economic resilience? Well, she's absolutely right, of course, Stephen, don't you think?
I agree. I mean, it ignores the capital cost of the solar, wind and batteries.
Which is why they haven't all done it in said regional town.
Oh, that's right. It's hugely, particularly the transmission costs. It's massively expensive. So you can't just, it's like tokens. You can't just think that, AI is, once it's going to be free. Tokens, you can just use endless amounts of AI. So you can't, it's a huge investment, Katie, to get your town to that position, tens and tens and tens of millions of dollars on all of that build out to do it. But you're never going to be able to disconnect from the grid. And there is the sunk cost of the grid. But look, the case is there. It's cheap. And isn't it nice how the energy costs argument has gone away? But I mean, power bills have been falling in Australia. Renewables are working, so, and we should keep rolling it out because Katie's right that the economics work better, but you can't just kill the gas industry and shut down all the coal. And it's a rollout. But Australia's doing well. We just should keep investing in renewables, and the savings will keep flowing. It's working well.
Yes.
Now we've got 2 questions on SpaceX from James and Andrew about the index impact. And it is true that that SpaceX will be in the NASDAQ 100 index in 10 days' time. And it's only S&P which is holding the line, saying you've got to deliver a quarterly profit. Will Elon ever deliver a profit, Alan? So they might never get into the S&P because they might never deliver a quarterly profit. But they are going into some of the other ones, the Russell. And this is driving a lot of the buying, I would argue. But there's the whole free float argument that, Elon owns 48% of the shares and more than 80% of the votes. And his shares are not in any index. So it's only what's called the free float. But I was amazed. The first day's trading, did you see that the first day's trading was about the same as the total number of shares issued? So there were 555 million shares issued, and the turnover on the first day was 530 or just under that amount. So a lot of the existing holders did sell, and that's going to be the game over the next year. Is Google can sell its 5% stake, currently worth $150 billion US, in June next year. Elon can start selling, and there's 90 million shares which I think become available to be sold in the second week of August after the earnings result. So will we get the insiders selling down to the index investors, which has been the story of Chemist Warehouse and Sigma? Everyone said, Sigma, Chemist Warehouse, not worth $35 billion. But the index investors have been buying off all the insiders, and the insiders have gone out and bought, $400 million worth of luxury property in the last 12 months as they've been selling out to the index investors. So it's a big thing, but I don't think it totally explains the mania that's driving the price up, 50%. I think that's more just a retail Elon hype thing. I mean, what do you think? Is it index investing, or what's driving this price?
Well, I think the index investing is a part of it for sure. I mean, the NASDAQ funds, passive funds, will have to buy it clearly, and everyone knows that, and so they're getting ready. But I do think that's going to be a part of it for sure, and it is going to support the price. But I think you're right that the main thing has been the hype for sure.
What I find interesting is that people refuse to talk about SpaceX. Like ComSec will not give me an answer to anything. I've been emailing them. They will not answer anything. Not a single, won't even confirm 30,000 people participated. Macquarie, no reply. Australian Super, no reply. It's reminded me why it's easier just to go to AGMs. They can't ignore you at the AGM. But I've been trying to get all these answers to all these big institutions and have not been answering. ASX and ASIC gave me some good answers about how they played the SpaceX game. But everyone should ring their super fund and say, what did we do with SpaceX? UniSuper, ART, Aussie Super. Did we apply? And I think most of them will probably say they didn't apply at all. That's my guess. It would have been, this looks overpriced, avoid it. And now
the only one we know about
Gina's made 50%.
The only one we know about is Gina Reinhardt. And did she announce it or what?
She leaked it to the Wall Street Journal.
Oh, I see.
But the SpaceX announcement after the float had been priced was 3 sentences. It didn't even say, why didn't they say, we welcome 2 million new investors. We welcome 3.5 billion from Australian investors. We name Gina Reinhardt, BlackRock, big supporters, new top 20 shareholders. Thank you for your support. They said nothing. Yeah. They're like the Kremlin. You can't get anything out of SpaceX. They just don't say anything. So I find it disappointing. And then ComSec won't say anything. People are too scared to talk about Musk or feel whether they're allowed to. So Gina gave a statement, confirmed it to the Wall Street Journal. And then, did this eulogizing of the great Elon Musk. Isn't he wonderful? I mean, you listen to Gina and then you watch Media Watch on Monday night, tipping a 15-minute bucket on Elon for all these sort of white supremacist, racist, anti-Jewish stuff that he's been doing on Twitter. Can't believe they're talking about the same person.
I know. People got stuck into me for dissing Elon in my column on Monday.
Oh, I've been getting quite a few tweet responses calling me an idiot and saying Elon's a legend. So yeah, he's got fanboys everywhere. I mean, he is the most famous business person in the world. I mean, you talk about, Trump loves to have the attention. I think Elon, no one's ever had an ability to generate attention like Elon.
Yeah.
It's just unprecedented. He's running $2 trillion companies. There's $15 trillion companies in the world, and he's running 2 of them. And I reckon there's a fair chance he'll merge them, issue SpaceX shares to Tesla shareholders because he hates the fact that he only owns 15.7% of the votes of Tesla. The SEC stopped him from being chair. He got kicked out as chair in 2018 of Tesla. So they put Robin Denholm in, the Australian ex-Telstra. So he's not allowed to be the chair of Tesla, and he's a control freak, and he doesn't control. He only got 15.7% of the vote. So I think he'll offer SpaceX stock to Tesla, and then he'll be the executive chair and controlling shareholder of the whole thing worth $3 trillion. And he'll sit there and say, I'm on top of the world now.
Yep. Now, we've got a few questions on AI tokens and AI flowing, and AI generally flowing from last week's episode. There's a few of them. Damien says, comments on my statement that Perplexity is not charging me GST, which I think that's right. I mean, I looked it up, looked at my bank account. I can't see that there's GST in there. He says that Claude is charging him GST. So he wants to know what gives. I don't know, Damien. I have no idea what gives. Are they charging GST or not? I don't know.
I think the big boys, if you've got an ABN, the big boys will be charging GST in Australia. But sometimes when you buy something direct online, they haven't quite got into the whole Australian GST system. It's moving very fast. So it might be that your Perplexity purchase was actually just direct outside of the GST system and you weren't doing it through your ABN, perhaps, I don't know. But they will all have to pay GST. And it's not going to save the Australian budget. It's just another expense. And I don't think we should get too excited about that they're ripping us off by avoiding GST, or that they should be taxed more to save our budget. They'll just be, it's more when they're making huge profits. There is a real issue around, Apple, Google, Facebook. They're paying sod all profits, corporate taxes in Australia because they route everything through Ireland and Singapore. That's the bigger issue from a tax justice point of view than are they paying GST. And Dylan says that he was pointing to the US going to war, the US government going to war against Anthropic again and putting an export ban on them, and saying, what should Australia do to solidify AI sovereignty? Certainly, it's interesting that that Anthropic and the US government are in a full-on war. And a lot of people are saying it's elevating the open source China alternatives, because why would you be captive of a closed system like OpenAI and Anthropic when you're exposed to government intervention, and the US Trump can actually just slap an export ban on something you've been buying off Anthropic. So it's a very interesting situation.
They're also, the Chinese ones are also a fraction of the cost. I mean, DeepSeek, I was just looking at the cost per million tokens. Claude's Opus 4.6 is now $25 per million tokens. DeepSeek's price per million tokens is $2. So they're really undercutting the others. I mean, Grok is $15 per million tokens. Gemini is $12 per million tokens. ChatGPT is $10 per million tokens. But the big, the more expensive DeepSeek is $2, and then they've got one that's 50 cents per million tokens. So they're really, and the thing is, although Claude and Gemini and ChatGPT are better than DeepSeek, a lot of companies are finding that DeepSeek is good enough at the price. So, they don't.
It's fair to say that because Matt's got a question about, are we all just being sucked in with cheap prices now, and then the prices are going to soar down the track? I do think the situation is that there's a global war for market share, and because the market is paying for losses, the market is happy for companies to be massively loss makers because they can see an enormous prize at the end of the day if they can be, in the top three. In 5 years' time in terms of AI rollout. So that's why the market, so I think the prices are totally uneconomic and will have to rise over time, and there'll be mergers over time.
Well, yeah, but this week they're getting into a price war.
So I'm saying, it's correct. Price wars until we see winners in 5 years' time. It's going to be massively subsidised and underpricing as the world works out who can get control of the gold mine.
Yeah, but I don't think China will ever let an oligopoly develop, an American oligopoly of two or three of them setting the price and jacking it up. I don't think that's ever going to happen.
The DeepSeek and their open source models will keep the oligopolies honest.
Completely.
That's probably the play. Yeah.
And
therefore,
Yeah, these big companies, OpenAI and Anthropic, and that will never make any money. They'll always be unprofitable, and their share prices will have to collapse.
Same with SpaceX. I reckon SpaceX will never make a profit. And it was just like OneTel. OneTel collapsed, and it never made a profit. It went from superstar to falling over because the capex just got too big for the founders. So, and I think Paul, who works in tech, makes an interesting point about just getting to the question of the history of this token concept. He says that NVIDIA created it. It was popularised in Australia by Craig Scroggie from NextDC, and it was conceived to visualise some abstract concepts. And he thinks that the correct way to think of tokens is three ways. One, it's a description of how large language models work, i.e. sentences are broken up into tokens, and the LLM predicts the most likely token in its response. And B, it's a unit of work in AI. The complexity of tasks is measured in tokens. And C, it's a billing mechanism. Subscriptions allow a certain number of tokens to be consumed in a given period. So he wants us just to move away from this tokens as widgets concept. And it's a bit more complicated, but they're the three ways that...
I say to that, good luck, Paul, because I reckon we're going to keep thinking of tokens as things because, we have to get our head around it somehow. It's hard.
Yeah, it is tricky, isn't it? So, and there's a lot of opaqueness in the, how do you price it? Are you getting a fair deal? So there's going to be whole industries that develop to measure and bargain for token and price. At the moment, it's a real dark art. It's much more complicated than widgets in a factory, that's for sure. Now, Jessica says, loves the pod. My question is, the increasing amounts of money keep flowing into the big companies, i.e. the Magnificent Seven. Would this end up taking away most of the capital from workers, small business, small companies? So it's the general crowding out question. And look, Jessica, you're right. I mean, tech is currently 40% of US valuations. The only bubble that was bigger was at the peak of the railway bubble in the US. The railway stocks got to 70% of all stocks. And 85% of gains this year on the US market are from those small number of big tech. But I think we need to move away from the Magnificent Seven, Alan. I think we need to say it's trillion-dollar tech. So there's now 11 trillion-dollar tech companies. I think that's because there's now more than 7. And then by the time we get OpenAI and Anthropic on, there will probably be 13 US trillion-dollar tech companies.
Yep.
Micron's just, Micron, memory chips, absolute bubble in memory chips at the moment. Micron's market cap today is 1.15 trillion. And Jensen Wong was saying Marvell is the next trillion-dollar company. Of course, they seem to jump by 30% in a couple of days. So, but look, the crowding out is a serious problem.
Yep.
And I mean, what's the answer to that? Just you got to just wait for the bubble to burst. All bubbles do burst. There's never been a perpetual bubble, has there, Alan? So this can't.
No, that's right. There has not been a perpetual bubble, and so this one won't be either. Perhaps go to Julian's question. I've been wondering for a while now why, instead of increasing interest rates and putting pain on mortgage holders, why doesn't the government use mandatory super contributions as a way of cutting down consumer spending? This would ultimately help people in retirement as well, and still take money out of the economy in the short to medium term. Yeah, I think he's right, but it's never going to happen. But I think it'll be a good idea. Absolutely.
It's all about what lever can practically be pulled. I don't know that jumping around with super contributions, the plumbing of that would be massively complicated.
It would.
So that's what the one we've seen work the best is obviously the fuel excise. With both ScoMo and Albo have played that card at different times, and that can add and take billions of dollars from the general economy. So that's the one that we've used so far. I would argue that just general fiscal policy is the best policy to avoid over-reliance on monetary policy. So the government should be running a surplus when the economy is running hot. Instead, every single government in Australia is in massive structural deficit, even at the top of a boom. Yeah. Mining boom, AI boom, and that's the recklessness of governments in a democracy. There's very few democracies these days that have the discipline to manage fiscal policy to be pro-cyclical, to work against the needs of monetary policy.
A lot of people also suggest moving the GST around. The trouble is, with that and the super idea, any idea, any policy that requires millions of companies to do something at the same time is going to be difficult to achieve. It just can't be done. I mean, the thing about interest rates is that the Reserve Bank can just go into the overnight cash market and buy and sell money and cause the overnight cash rate to move and achieve a target that it's got. And that just automatically flows through to mortgage rates. So it kind of is a very easy way to manipulate the economy.
It's very effective. Now, Mark's got a lovely line. Give with a warm hand, not a cold one. And Mark's laid out his position. So he and his wife are in their mid to late 50s. They've retired early. They're worth about $2.8 million. They've got $1 million mortgage-free home. And they've just given each of their sons $100,000 to help them into their first property purchase. And they'll have to watch their dollars until they hit 60 when they can access their super having retired. You've got to wait to 65 if you haven't retired. But they're encouraging the concept of giving money away while you're still alive as a way of sorting out the generational wealth passed down. They've just done it. And they were suggesting there should be policy incentives to make it easier, such as stamp duty exemptions on downsizing and better gifting limits. At the moment, any gifting that you do, if you want to get on the pension, they go back 5 years at your gifting to your kids, and Mark's suggesting maybe they should only go back 3 years, because Mark's policy is to maybe get onto a part pension when they turn 67 if they need it, if they qualify, but they shouldn't be getting penalised for helping their kids into houses. So should there be a buy your kids a house early access to super rule, Alan? What do you reckon? You can tuck into your super if you're putting the money directly into your kids getting into their first home.
I do think that there's a case for coming up with ways of encouraging people to provide early inheritance. I think that particularly while housing is where it is, I mean, eventually I think we might get back to more affordable housing, but for the moment, house prices are very high and kids can't really save. And now, the time it takes to save for a deposit has doubled in the last couple of decades. And for a lot of kids, a lot of young people, it's impossible. So, we've given our kids some help to get their house, and I think a lot of people are doing that.
Absolutely. The pension is already an incentive, because 80% of Australians over the age of 67 are on the pension already. So super has not, ended the reliance on the pension. Only 20% are genuinely self-funded, and I'm guessing that quite a few of those 80% have gifted their kids quite a lot, and in some cases enough to then qualify for a pension, because the gifting rule only does go back, I think, to 5 years. So I think that already works as a bit of an incentive, because we have such a large cohort that are on the pension.
So we probably should talk about Peter's question, which gives us a chance to talk about KPMG. So why can't the federal government just indicate that any audit business with a professional services arm will not be permitted or considered for federal government tenders? I would think that this would result in a flurry of reorganisations and all of the tricky issues would suddenly evaporate. Keep up the good work. So perhaps just to recap, KPMG's got into trouble because a whistleblower has pointed out that they've been using data and information from one audit to win other audits, in particular Westpac. And, that is highly unethical. So KPMG's in all sorts of trouble. People have got the chop. There's a lot of questions about whether there ought to be some sort of split between audit and professional services. What do you think, Stephen?
Look, it's not happened anywhere in the world. So that's what I think. Australia, we love pioneering. We pioneered the under-16 social media ban and slugging big tech to fund journalism. But I'm not sure little old Australia can be the first in the world to, by government mandate, legislate that these big global service providers that operate in every country in the world, in Australia uniquely, have to ring-fence their audit operations. Because this governance issue, it's more within the KPMG, particularly Sydney, audit function. It's auditors talking to each other to win the bid of Macquarie. And Lend-Lease just announced they've sacked KPMG this week. So it is an interesting situation. I think the reform, we need to focus on the current rule. So after the HIH collapse in 2003, where a whole bunch of Arthur Anderson people were on the board of HIH asleep at the wheel as it went broke, and they'd never declared a loss in its entire history, unlike OneTel, which had never made a profit. And the rule that came in there was the 5-year partner rotation. So every 5 years, you must have a different partner. In the UK, the rule is you must have a tender every 10 years and you have to sack your auditor after 20. I think we should definitely go down the limited tenure path. I love asking the question at AGMs. It's my favourite question in the last few months. When did we last tender the audit, and when are we next going to tender the audit? And the answer is obviously a very embarrassed, we've never tendered the audit and we've never had a different auditor. So mandatory audit rotation, I actually think, is the better governance rule, because the system works quite well because you have to disclose your non-audit fees and they tend to be quite low. So any other work you're getting from having your foot in the door, you have to disclose that in the annual report, and shareholders vote against companies that have excessive non-audit fee payments. So I just think we should do more reform on the actual audit function. But I do agree that they're massive conglomerates. They've got enormous power, but I can't see how little old Australia can be first in the world to start telling these massive multinational service firms how they should conduct their business, just because the Sydney office has been sharing a few things they shouldn't have.
I think they could think of two extra changes. One would be a dedicated auditor regulator, because at the moment ASIC is in charge of regulating audit, and they've just got too much to do. They're too busy. They can't really do it properly. They need to have somebody whose job it is to focus on audit and how it's being conducted and who's doing it and all this. And the other thing is that these audit firms are all big partnerships, massive partnerships. They're not companies, which means that they're regulated by the states, not by the corporations law, which was transferred by the states to the Commonwealth. And so I do think that the Commonwealth, there should be a sort of a handover by the states of their partnership regulation. And I know that that would then apply to all sorts of small partnerships as well. But still, I do think that there's a case for the Commonwealth regulating partnerships, not the states, and that there needs to be a dedicated auditor regulator.
Yeah, I'd agree with that. I think that's a good recommendation. Now, before we wrap, we should just take probably as comments from Stephen and Rodney, who wrote in on the UK and Canadian savings schemes. So the question last week was about whether Australia should have the UK ISAs, and a couple of people have written in to say that both Canada and the UK have very good tax-free, pretty much, savings mechanisms. So if you're saving for your first deposit on your house, in Canada you can put $7,000 a year in what's called your tax-free savings account, the TFSA, and you can keep putting $7,000 a year in, and then you don't get any tax, and then you put that into your house. So, in light of the proposed big increase in capital gains tax, the flat 30%, a lot of young people are saying, "How are you helping us to save?" And in Canada and the UK, they have very good systems. They're different to super. The UK's pension system is different. But I think it's a really good point that if the government is going to smash capital gains tax on everyone at a flat 30%, then what incentives are we giving to young savers in a tax-preferred way where they don't have to lock it up till they're 60 or 65, which is because the only thing they're doing is super. Super is massively tax-preferred, but how do you can't do that if you're going to buy a house. So look at the Canada system, I would say. Look at the UK system, and Australian politicians need to come up with a tax-preferred short-term savings system for young people above and beyond the massively paternalistic lock-it-up-forever super system in Australia, which is unique to Australia, but doesn't help young people saving for a house in any way.
Correct.
Here ends the lesson, Alan.
Beauty, Stephen. Thank you. Thanks, everyone, for listening to today's episode of The Money Café. I'll be back next week with James Thompson. As always, send in your question to themoneycafe@intelligentinvestor.com.au, and we will do our best to get to it. Until then, I'm Alan Kohler, editor-at-large of Intelligent Investor and a guy at the ABC.
I'm Stephen Mayne, contributor at Intelligent Investor, founder of Crikey, shareholder advocate, and I'll see you in the new financial year.